First of all, the few basic thing that 1 second, I will directly take up that particular point first of all. Okay, thereafter step by step we will go. Where you have received any cash or any kind under an agreement for not carrying out any activity or not sharing any know-how, patent, copyright, license, franchise, etc. They are one of the very special transaction for not carrying out, not sharing, for not doing something. Also, if you are getting this kind of money, then this is your specifically your business income. Okay, so this kind of situation is already there. Okay, now see, so this is anyway your business income, and since it is anyway your business income, you do not require any adjustments. So we will say that it is already business income, so we don't require any adjustment for the same. Second point, damages recovered from a company for making changes in the terms of agency contracts. So any changes in the terms of the agency contracts, and you're getting some money for that. This is also part of the business income. You do not require any adjustments whatsoever. See, all these hardcore basic points, but I will just keep on turning this few pages. See, any compensation for termination, modification of the terms, managing the agency, holding agency, all this kind of situation, any termination, changes in the agency terms, condition, everything is your business income. So you don't require any adjustment because it is anyway related to the profit and loss. Sundry creditors written off. Now creditors written off is straight away your deemed income under section 41, because creditors means you should have purchased it. So purchase means expenditure of the earlier years, and now creditors written off. So that is basically on the credit side. It is your deemed income by virtue of section 41, no adjustment required. Then incentive from Zolo for achieving the sales target. For any such incentives, I repeat, any such incentives to achieve the sales target, okay, is already your business income because it is in the course of the business. These incentives, there are many judgments, in fact, but one of the provisions which I want you all guys to just make a note in your mind actually. Okay, 1 second. See, this is a very important point. Register in your mind. Any benefit or any perquisite, convertible into money or not from business, this will be regarded as your business income. So there are so many judgments on this, achieving sales target. You got some, suppose you're a dealer of a company, you got a foreign travel trip free because you achieved the sales target. Or sometimes some company give you silver coin, they give you one second-hand motor car. All the situation, anything which is in the course of the business, anything which is in, so any benefit, any perquisite, whether in money or whether not in money. So you got a cash income. If it is not even money, that you didn't get a kind transaction, it will be your business income chargeable to tax, because this benefit you are getting out of the business. So for achieving the sales target is also a business income. The loss from trading in Nifty derivatives, rupees 150 STT has already been paid. Now there is one concept of a speculative. There is a speculative transaction. Okay. However, I will explain that particular speculative transactions. But where there is any trading in derivatives or any trading in recognized stock exchange, I repeat, any trading in recognized stock exchange will not be regarded as speculative. So it is specifically provided that it will not be regarded as speculative, and therefore it will be your normal business income. Even if it would have been a speculative business income, then it would have not made any great difference. But in the given point, it is a loss. Okay, and since it is a loss, and if it would have been a speculative loss, then I have to separate that as per carry forward set of chapter. But since it is in the recognized stock exchange, it will not be regarded as speculative, and therefore this loss will automatically get adjusted with my other incomes in the business income, and therefore I do not require any adjustments whatsoever. Okay, I will discuss that particular point of speculative transaction also. Just a minute, please. Okay, now, so no adjustment for Nifty. Loss from trading in agro commodities where CTT is not paid, same to same in an approved exchange, commodity exchange, same to same, it will not be regarded as a speculative. Although CTT has not been paid, commodity transaction tax has not been paid. Both the points. Okay. First of all, friends, I will take up section 43.5. As I already told you, friends, that in the initial part I'll have to do a lot of scrolling, but slowly scrolling will get settled down, because then I will tell you, you only turn the pages and come to that particular clause. Okay, just 1 second. Let me scroll, baby. Because if I do that fast scrolling, no, then also it is a problem for me. The scrolling is only one thing which I don't like to do in my life. Anyway, 1 second. Section 43.5. I think that 43.5 I might have given you in here it is. See this particular speculative transaction. Okay. Now see, what is a speculative transaction is defined under the law by section 43.5. It says that any transaction, okay, otherwise than by taking an actual delivery. Otherwise than by taking the actual delivery, it will be regarded as a speculative transaction. So if you do not take a delivery, it will be regarded as a speculative transaction, general thing. Okay. However, all these items which are specified, okay, shall not be deemed to be a speculative transaction. Okay, so these are all specified transactions which will not be regarded as a speculative transaction. Okay. Further, where there is any transaction in derivatives or commodity, okay, it will not be regarded as a speculative transaction. Okay. Further, with respect to some agri commodities or somewhere that CTT and all that is not there, then requirement of that CTT etc. will not be applicable, because in some of the transaction, if CTT is not there, then no need for you paying that particular, because CTT is not applicable. Okay, so basically it says that where derivatives or the commodity transactions, it will not be regarded as a speculative transaction. Okay. Okay. The next point. So you will not require again any adjustment. No adjustment, because other incomes is already including that. Okay. And both of them were loss, but still it is not a speculative loss. So no adjustment. Point number G. Recovery of bad debts of Mr. A is this particular figure. Now see, recovery of bad debts will again be the same kind of section 41 concept, that you have expended something, that means you have already claimed the bad debts, you have already got the deduction, now there is a recovery. So section 41 straight away, so it is anyway deemed business income, so no adjustment required. Next point, receipt from followers 75 out of the activity of teaching and preaching of Jainism. So this amount out of the teaching and preaching of Jainism. Okay, one of the very good point which I will bring to your notice. See, in the definition of that profession includes vocation, correct? And that particular vocation, there is a Supreme Court judgment. Supreme Court has said that where there is any activity of teaching or preaching, where there is any activity of teaching or preaching, 1 second, I will see this vocation definition. Any activity of teaching or preaching of any religious matter will be regarded as a vocational activity, and it will be under the head business and profession, because this is one type of vocation which the courts have always explained. So this is also under the head business and profession, and therefore no adjustments is required, because it is already included your under the head business and profession, your other source income, sorry, other incomes, not other source income, otherwise you will confuse. Okay, now once you have done this, complete all these adjustments,
Okay, now you have to come through all your debit and credit sides. Okay, because all the adjustment, see, we have already completed. So all that, and thereafter the MCQs are there, which I will discuss afterwards. Okay, so now the second part of the question, which will continue with the adjustment, see all the credit side. Now sales is always business, interest on bonds. Now these can be taken as a IFOS income. Okay, so because he's just a retail trader, so bonds is not a dealer of bonds or doing this financial transactions. So basically this will be going into his income from other sources. So from business income you will minus 2400, and to IFOS you will add 2400. This is one adjustment you have to carry out. Other business receipts are given, so it will be anyway under the head business, so we don't have to worry about it. Now debit side, opening stock is okay, purchases are part of the business, so that is okay, gross profit is okay. Now salary is a business expense, rent rates is business expense, interest on loan is also a business expense. Okay, then depreciation again business, but anyway whatever adjustments we had to do, we have already done that. So we are only doing the headwise analysis, that whether it is business only or you want to take it to some another. Printing stationery is business, posted telegram is business. Loss on sale of shares 8100, yeah, these can be taken as capital gains. Okay, so what you will do, because this is already debited here, no, to profit and loss. Okay, so this will not be allowed as a business income, so you will add 8100 under the head business. Okay, and you will show this particular loss of 8100 under the head capital gains, and under that capital gains, as per carry forward set of chapter, treatment will be given. So you have to carry forward, so you carry forward. Okay, other general expenses 7060, so that will also be considered properly on that particular front. Okay, and net profit, so we already started our discussion with respect to the net profit. That's all, and you just take the total of all these adjustments and you will get your business income. Now come to this particular MCQs. Sundry creditors written off will be income as per the provisions of. See, sundry creditors written off, I already explained that to you, section 41. Sundry creditors means purchases. So purchases in one particular year, in the subsequent year you write off. That means you get that particular benefit. So it will be a deemed income by virtue of section 41. Okay. Advance received from a debtor, second one, if it is written off, will be income as per the provisions of section number whatever. Okay, now see, this is here you require a little bit of extra attention. Advance received. Okay, now when the advance have been received, actually it was not a P&L item. Okay, so see, if you have taken cash to the debtor's account because it was advance received from a debtor. Okay, so this was the entry when you might have cash bank account. Okay, like this you should have passed. Now you are going to write off this particular advance. So liability has been written off and you will transfer it to P&L. Okay, this is the entry that you are going to pass. Okay, now can this be regarded as an income? The reason being that in the earlier years, in the preceding year, there was no expense. See how the creditors, when you are writing off the creditors, or if the creditors is giving you a discount, you have already got expense in the preceding years. But when it comes to the advance received from a debtor, in the preceding years, there was no such income because of pure balance sheet item. And if it was written off and taken to the credit side of the P&L, whether it can be regarded as an income under section 41 or not. And that is the main question. Okay. Now see, under section 41, one very good technical point, it is based on the Supreme Court case law that I will bring to your notice. Okay, it is based on the Supreme Court judgment. Okay, see, section 41 is applicable for any allowance or deduction with respect to a loss, expenditure, or a trading liability. Beautiful point. So if there was any deduction or if there was any allowance which was made towards a trading liability, this word trading liability is something which the Supreme Court has debated, and there are quite a good explanation in the judgment of the Supreme Court. The Supreme Court has said that this word trading liability, where there is any remission and cessation of a trading liability, it is regarded as an income. Okay, but this trading liability means any ordinary business transactions, any ordinary business transactions
does not necessarily mean that it should be a P&L item. It does not necessarily mean that it should be a P&L item. So if there was any remission or a cessation of a trading liability, that means you had any business liabilities, ordinary business liabilities, if it is written off, that means if there is any remission, that means if that liability is remitted, or if that liability cease, liability cease means liability extinguish, that means you transfer it to P&L logically in the books of accounts, it will be regarded as an income. Okay, so these particular debtors, okay, advance received from the debtors, very typical transaction, but ultimately it is written off. That means you had received the money, and by whatever account you transfer it to P&L, so it will be a deemed income under section 41. So that's answer, point number B. Next, the bad debts recovered will be income of the assessee. The bad debts recovered will be the income of the assessee. So any bad debts recovery is same to same situation. Section 41 comes into picture. In fact, 41 has some of the subsections also. But the recovery of the bad debts is also deemed income by virtue of section 41. Okay, so that's the answer. Next, the assessee in the question can opt for the presumptive scheme under section this. Now, in the given question, if you look at this, the presumptive taxation can be considered. It can be considered. See, it is a sale, purchase, or trading. It's a retail trader. So, retail trader could have opted for a presumptive scheme. But if you look at this particular MCQ, 44 AD provision is nowhere printed, and that's the reason the answer is none of the above. Because this kind of MCQ, which I have given it to you, is a pure section number base. That means you should know what section number is applicable for what. And that is what I wanted to show it to you. Okay. Now this point. Amit, a brother of Kalpesh, has a GST liability for previous year 1819. So previous year 1819 and 1920. Previous year 1920. Understand this very carefully. For 60 lakhs, 40 lakhs. 60, 40. The payment of 100 has been made on 1/5/21. On 1/5/21, the entire payment has been made, which is 100. Okay. Now, see, this particular payment is not made first of all in the previous year. Okay. If the payment is not made in the previous year, it could have also been made before the due date of furnishing of the return of income of the respective year. But that is also not done. See, previous year 1920, somewhere in July of 2020, there might be a due date. Somewhere, I'm just telling you. So somewhere in the assessment year, okay, there might have been a due date. Okay. Now, you have not even paid before the due date. That means you have paid even late. Okay, so in that particular case, your previous year 21-22 will give you the full deduction of 100 upon the payment basis as per section 43B. So if you see, 43B deduction will be in the previous year 21-22, that is okay. So all option is 21-22, and entire 100 you will get the deduction in that particular year. Okay, so the answer is C. Okay, in MCQ number 5 above, deduction allowed in the previous year 1920. Previous year 1920 everywhere. Okay, so 1920 you have not paid before the due date, you have paid even late thereafter. Okay, so in that particular case, for the 1920 you cannot get any deduction. For 1920 you cannot get any deduction because you have not paid it during the previous year, neither you have paid it by the due dates of that particular previous year. Due date of that particular previous year, and therefore for previous year 1920 you are not going to get any deduction by virtue of section 43B.